Welcome back to the Deep Dive. We're your shortcut, helping you get really informed without feeling like you're drowning in information. We know tackling topics like financial markets, well, can feel like a lot, so much jargon, complex ideas. It's easy to get overwhelmed, but that's why we're here. We cut through the noise, pull out the key nuggets, so you get the insight without the swamp. Today, we're diving deep into the world of Forex trading. It's fascinating, but yeah, often misunderstood. And our guide for this, it's Currency Trading for Dummies, the third edition. Authors Brian Dolan and Kathleen Brooks. This book, it's got a really strong rating, 4.6 out of 5 stars. And it's specifically marked as Best for beginners and intermediate traders.
Right, folks who want that clear, structured introduction to Forex.
Exactly. So our mission today is to unpack this book. What makes it good? What will you learn? And, who is it really for? By the end, you should have a much better handle on the core mechanics, the mindset needed for Forex trading. Okay, so let's start right at the beginning. For anyone maybe just hearing this term, Forex, what is it? How does it work?
Sure, Forex is short for foreign exchange. And simply put, it's the marketplace where currencies are traded. Think of it like the world's giant currency exchange hub. It's actually the largest financial market globally. Trillions of dollars change hands every single day.
Trillions! Wow.
Yeah, it powers everything from, international trade, tourism, right up to huge investment speculation. But here's a key difference from stocks. It's not one central place, like a stock exchange building.
Oh.
It's what we call an over-the-counter or OTC market. It's basically a huge network. Banks, traders, they deal directly.
So it's more like a web than a single spot.
Exactly. And that's why it can run 24 hours a day, 5 days a week, following the sun around the globe.
Global, always on.
Yeah.
Almost. So how is that fundamentally different for a trader compared to, say, buying Apple stock or gold? Does the book get into that?
Oh, absolutely. So the book makes a really important point here. While it is 245, the activity level isn't constant.
Right, it ebbs and flows.
Precisely. The real action the book highlights often happens during session overlaps, like when London and New York trading hours overlap.
Ah, so more people are active then.
Exactly. Much higher liquidity, more volume. That's often where the opportunities are, rather than just, staring at charts 24/7.
Makes sense. And you're not buying just one thing, are you?
No, that's another key difference. You're always trading currencies in pairs, like the euro against the US dollar, so your USDD. You're essentially betting on one currency strengthening or weakening against the other. You buy one, sell the other simultaneously.
Okay, so it's pairs, decentralized, global. Got the basics. Now, who are the main players making these trillions move? Is it just big banks?
Well, the banks are huge, definitely. But the book paints a picture of a whole ecosystem. At the very top, you've got the central banks. Think the Fed in the U.S. or the European Central Bank. They sometimes intervene to manage their currency's value.
Okay, the big government players.
Then the massive commercial banks, your Citis, your Deutsche Banks, they handle huge flows for clients and trade for their own profit too. Right. You also have big institutional investors, hedge funds, multinational corporations. They're managing huge sums, sometimes speculating, sometimes hedging risk.
Hedging meaning protecting against currency fluctuations.
Exactly. And then finally, there are retail traders, that's individuals like us, trading smaller amounts through online brokers.
So a whole range of players with different motives.
So definitely. And understanding that mix helps you understand why the market moves sometimes. Yep. And building on that structure, the book also clarifies how these pairs are grouped. It's quite helpful.
Oh, out so.
You have the majors, which always involve the US dollar, EUR, USD, JPY, that sort of thing. Very liquid. Then minors, two major currencies, but not the US dollar, like URBFP, euro versus British pound.
Okay.
And finally, exotics. That's a major currency paired with one from a smaller or emerging economy. Think USDT CRY, dollar versus Turkish lira. Can be more volatile.
Got it. Majors, minors, exotics. So with all these pairs, what actually drives their prices up and down? It can't just be random, right? The book must cover the why.
Absolutely not random. And yes, the book really dives into the fundamental drivers. It's a mix of economics and global events. Think about interest rates. If a country raises its rates, that can attract foreign money looking for better returns, which boosts demand for its currency.
Okay, higher rates, potentially stronger currency.
Generally, yeah. Then there's inflation. High inflation eats away at purchasing power, making a currency less attractive.
Makes sense.
GDP, gross domestic product, that's a big one. Shows the health of an economy. Strong growth often means a stronger currency. And of course, monetary policy, what the central banks are doing. Their decisions on rates and money supply, hugely important.
Right.
And you can't ignore geopolitics. Political stability, elections, international tensions. These can cause really sharp, sudden moves in currencies. The book ties all these threads together.
That's a great overview of the big picture forces. But okay, someone understands that. How do they then analyze the market on a day-to-day basis to make actual trading decisions? Is that where technical analysis comes in? Looking at charts.
Precisely. Technical analysis, or TA, is basically about looking at past price patterns to try and figure out where prices might go next. It uses charts and various mathematical indicators.
Okay.
The book does a good job breaking down the basics here and talks about different chart types, like candlestick charts. They're very popular.
Candlesticks like on a birthday cake.
Huh, not quite. Each candlestick on the chart shows the price action, the open, high, low, and close price for a specific time period, like an hour or a day. It visually tells a story.
Ah, okay. What else?
It introduces support and resistance levels. Think of these as invisible price floors and ceilings where the price often seems to bounce off or struggle to break through.
Right, key price zones.
Exactly. And then there are indicators. The book covers several key ones very clearly, like moving averages. They smooth out the price data, making it easier to see the underlying trend direction.
Okay, helps see the main path.
Yeah. Then there's something called the RSI, or Relative Strength Index. It's sort of like a momentum gauge, indicating if a currency might be overbought, maybe due for a pullback, or oversold, perhaps ready to bounce.
Overbought and oversold, like stretched too far.
Kind of, yeah. And another popular one is the MCD Moving Average Convergence Divergence. That helps spot changes in trend strength and momentum.
MCD, RSI. Lots of acronyms.
There are a few. The book even explains things like Fibonacci retracements. These are potential support or resistance levels based on mathematical ratios that, kind of surprisingly, often show up in market movements.
Interesting. So all these tools help traders read the charts and find potential spots to get in or out of a trade.
That's the core idea, yes. Spotting potential opportunities based on historical patterns and indicators.
Okay, so you've got the market map, you've got the chart tools. What about actually doing it? How do you execute trades? What strategies does the book suggest?
Right, the execution part. The book gives a good overview of different approaches, basically distinguishing between short-term and long-term styles. For shorter term, you've got day trading in and out within the same day, and scalping, which is even faster, aiming for lots of tiny profits from very small price moves.
Very quick in and out.
Yes. Then for longer holds, there's swing trading holding positions for maybe days or weeks to catch larger price swings, and also carry trades. That's a bit different. You try to profit from the interest rate difference between the two currencies in a pair.
Ah, earning interest while you hold.
Potentially, yes, if you're holding the higher yielding currency. But the book stresses something crucial, no matter the strategy.
Which is?
Risk management. Specifically, things like the risk-reward ratio, making sure the potential profit on a trade justifies the potential loss you're risking.
That sounds fundamental.
It is. And tied to that is using stop-loss orders, basically. An automatic exit point if the trade goes against you by a certain amount. Protects your capital.
Cuts your losses automatically.
Exactly. And take profit orders to lock in gains when a trade reaches your target. Planning your exit is as important as planning your entry.
That covers the mechanics of strategies. But, trading seems like it involves a lot of psychology. Does the book get into the human element, staying disciplined?
Oh, massively. And this is a real strength of currency trading for dummies. It puts a huge emphasis on trading psychology and risk management, often the hardest parts for beginners.
I can imagine fear and greed kicking in.
Exactly. The book talks a lot about trading discipline needing a plan and actually sticking to it. Emotional control is key, consistency. And it offers a really sharp insight here. It says fear and greed often don't show up in big blowups, but in tiny ways like deviating just a little from your plan on a small trade.
Oh, interesting. The small slips matter.
They really do.
Yeah.
The book argues real discipline is in that everyday consistency, not just trying to recover from big mistakes. And on risk management, it really drills down into practical things like position sizing.
Meaning how much you trade at once?
It's essentially yes. But more specifically, figuring out how much capital you're willing to risk on any single trade before you even place it. It's about calculating that risk relative to your total account size.
So you don't blow up your account on one bad trade.
Precisely. It's all about capital protection. The book frames it like job number one is protecting your trading capital. Trading profits come second.
That sounds like very sound advice, especially for dummies like me, potentially.
It's critical for everyone, but especially vital when starting out.
So for someone listening who's now thinking, okay, I'm curious, What are the first practical steps the book recommends to actually get involved?
It lays out a clear path. First, choosing a reputable Forex broker. That's your gateway to the market, so it's important to pick a good one. Then, setting up your trading account. The book explains the key things you'll encounter then.
Like,
Things like spreads. That's the small difference between the buying and selling price of a currency pair. It's usually how the broker makes money.
their commission, basically.
In effect, yes. Then there's leverage. This is a big one. It lets you control a large position with a relatively small amount of your own capital.
Sounds powerful.
It is, but the book is very clear. Leverage is a double-edged sword. It amplifies potential profits, but just easily amplifies potential losses. You have to understand it and respect it.
Right. High risk, high reward potential.
Absolutely. Related to that is margin the amount of money you need in your account to open and maintain a leveraged position. And you need to be aware of any other fees the broker might charge.
Okay.
And critically, absolutely critically, the book hammers home the need to use a demo account first. Practice trading with virtual money.
Practice before playing with real cash.
Yes. Get familiar with the platform, test your strategies, make mistakes with fake money before you risk your own hard-earned capital. It's essential.
Good advice. What about other tools? Beyond the broker account, what does the book say you need?
It mentions the essential toolkit. Trading platforms, for one.
Yeah.
MetaTrader is a very common one. It discusses software to place trades, view charts, use indicators.
Okay, the software interface.
Yeah. Also, reliable news sources. Forex markets react quickly to news headlines. Economic calendars are vital too. They list upcoming economic data releases like inflation reports or interest rate decisions, which can move markets significantly.
So you know what's coming up.
Exactly. And access to good market data providers for historical prices and analysis. These are the practical tools of the trade.
So putting it all together, why does this book seem to resonate so well? That 4.6-star rating is pretty high. What are its standout strengths, according to our deep dive?
Well, several things really make it shine, especially for its target audience. The language is a big one. It's plain English, actively avoids dense jargon, makes complex ideas feel accessible.
That's huge for beginners.
Definitely. It uses lots of real-world examples, which helps connect the theory to what actually happens in the market. The structure is also excellent. Well-organized chapters make it easy to follow along or go back and reference specific things.
Easy to navigate.
Yes. And it offers a really balanced perspective. It highlights the opportunities in Forex, sure, but it's very realistic about the risks involved. No hype.
Grounded in reality.
Very much so. And as we've discussed, that strong, consistent focus on risk management and trading psychology is a major plus. It helps beginners hopefully avoid common, costly mistakes. Plus, the newer editions, like the third we looked at, they keep things current. They touch on algorithmic trading, the impact of big events like Brexit, how digital platforms have evolved.
So it's not outdated.
No, it stays relevant.
It does sound really fair, but you mentioned it's for dummies. Even simplified, is there a risk of information overload for a complete newbie?
Yeah.
And who precisely is that ideal reader?
That's a fair point.
Yeah.
I mean, Forex is complex. Even simplified, the book covers a lot of ground, so someone totally new to finance might need to take it slow, maybe reread sections.
Okay.
But it really aims to give you that solid foundation. As for the ideal reader, it's perfect for someone who's heard of Forex, may be curious, but has zero trading experience and wants a clear, honest starting point.
Total beginners.
Yes. Also, beginner retail traders who are maybe just starting out and want that structured, risk-aware approach before they jump in deep.
Building good habits early.
Exactly. And maybe investors who trade other things like stocks and are curious about adding currencies for diversification. Think of it like a comprehensive Forex 101 course in a book. It gives you the mindset, the mechanics, the methods to hopefully start smart and avoid those painful early losses.
Okay, that makes sense. But just as important, who is this book not for? Where does it fall short?
Good question. It's definitely not for seasoned pros or, say, quantitative analysts, the quants.
Really not.
Well, it doesn't go deep into complex mathematical strategies or algorithmic training models. It's foundational, not advanced. And as we noted, while it explains concepts clearly, it doesn't give you ready-made, step-by-step, trade this now blueprints.
Yeah.
It's more about teaching you how to approach the market, how to analyze, how to manage risk.
Teaches you to fish rather than giving you a fish?
That's a good way to put it, yeah. It empowers you to develop your own approach.
Yeah.
Based on solid principles.
Right. Well, this has been a fantastic deep dive. We've really unpacked Forex trading, moving from the very basics to understanding the market, the players, the analysis, the strategies, and importantly, the mindset. Thanks to Currency Trading for Dummies, you listening should now have a much clearer roadmap for understanding this complex world, hopefully without that feeling of being overloaded.
Absolutely. And the book itself concludes, quite rightly, that just reading it won't instantly turn you into a profitable trader overnight. But it provides that crucial solid foundation. So maybe a final thought to leave you with. We know markets constantly change. The book mentions trends like algorithmic trading, ongoing geopolitical shifts. Given that dynamic world, how can someone take this solid foundation and really continue to build on it? How do you adapt and thrive in Forex over the long term? Something to think